Welcome back to your channel. My name is Brad, and today we're going to cover NEOS and what is going on with Kurv. If that's what you're looking for, stick around. So my name is Brad, and I am retired, and I look at cover calls and what is actually going on with some of these funds, especially my favorite funds. And today we're going to cover NEOS funds, and we're going to look at Kurv and what is going on and why you might be interested in what they're doing, because they are clearly doing something different than what they did last year and different than most funds that you might be familiar with. So let's go right into it. So SPY, you currently see where they are on their strikes. They are past the first strike. They are closing in on the second strike. The red dotted line is all-time highs for the index. But right now, we are past the first strike, headed towards that second strike. Once we get past the second strike, we'll be limited in growth. But remember, we're already halfway through the month, and they roll these calls at the end of the month. So not too worried about it, and we'll just take the appreciation as it comes in and take those distributions. Going on to QQQI, I see QQQI is again past the first strike. You see where all-time high is with the red dotted line, and you can see that their second strike is right near all-time highs. Again, take that 14% and enjoy reinvesting portion of it and living off the rest. IWMI. Now this is an interesting one because it's on the Russell. When NEOS first came out with it, the Russell was on a tear going north because everybody thought there was going to be rate cuts. And there hasn't been rate cuts because the Russell will do better. The Russell will do better when the Fed has a lower interest rate, because that will increase their actual profits. So we will have to see what happens with the Russell. Right now, they're past their first strike, going towards that second strike. And once they get past the second strike, then we'll only see approximately a 30% gain of any of the Russell. But you can see where the all-time highs were. I'm still involved in the Russell, even though it is a smaller part of my portfolio, paying me that 14%. Now moving on to what they have for REITs, which is IYRI. You can see that they so far have never finished actually in the money. So they always ended up out of the money on these, but they're right close to that first strike. So maybe this month we end up being on the first strike in the money. Don't know, but so far they've never actually landed in the money with their strikes. So that's all profit, and there you have it. Nothing to really criticize, because just to give you the scenario of what they actually do is they rate these calls 7 weeks out at the beginning of each month. Then they redo that every single month right on the last trading day of the month. So the first is always new calls for NEOS, and they roll them out another 7 weeks. That gives them time to adjust where their calls are. So we still have another 14 days before they roll these calls again. And in between time, let's just continue to take this one as a 11% payer, and it definitely is different than the others being on REITs. Now, NEOS came out with their new gold fund. Gold has gone up, gold has gone down, gold has been all the way around since they've come out. Personally, I bought a small portion, and I'm putting on some orders onto the system every week to buy below my cost basis. If it hits it, it hits it. If it doesn't hit it, no big deal. We'll just take the appreciations to the ones that we have. But right now, gold is slightly above where they started, and it has not gone through any of their strikes. It is above the 311 where they started, but it has not finished, but it has not touched the strikes at all. There was no touches as of yet. Well, one thing I do like about NEOS is their Bitcoin holdings, because they actually hold approximately 25% of actual HODL, which actually holds Bitcoin. They rate on just about that 50% range to get their premiums of about 28% per month. Currently, we're not even close to any of their strikes. Tons of room for it to go up in price, but we will see how this plays out because we still have another few weeks. So we're going to enjoy any upside for now. We are nowhere near their first strike. Now moving on to Kurv. Kurv has been interesting. In February, they changed their prospectus, and now they have different mechanisms that they can use other than just creating a synthetic and writing a call on it. And we're going to go through 3 of them right now so you can actually see how this actually functions and why you might want to use a professional fund manager to do some of this, because doing it yourself would be extremely not difficult, but it would be a lot more intensive for the non-options trader. First one we're going to look at is going to be Amazon. This looks like a fairly simple synthetic, being the orange line. The green line is their call, but what they did do is they put a protective put all the way down at 180. So if Amazon decides to take a big dump, we have a protective put that is actually all the way out until August 15th. So they don't have to write another protective put for another couple months. You can see where their call is, and they wrote 100% on that call. So if they go through the green line, they will get capped on Amazon or AMZP. The next one we're going to look at is going to be Netflix. If I look at Netflix, very similar to the last one. They wrote a synthetic. They wrote the call, which is the green line. The synthetic is the orange, and it is out until September. You see the green line, which expires on the 20th, which is actually Friday. But if you look down at the bottom, they also have a protective put that they've been carrying, not on the whole portfolio, but on part of the portfolio. But even if they go through the green line, and this is the difference here, what I see in this fund, they even go through the green line, which is their cover call, and where they're collecting their premiums to pay us out. They only wrote it on just one call more than 50%. 50% of the portfolio is actually uncapped. If it goes up and we have a protective put, just in case that black swan comes one day, it won't totally wipe us out, but it's only on a very small portion of the portfolio. Now, bear with me on this one because this is the most complicated one that they have. And this is exactly why you want a professional fund manager that actually knows what they're doing to actually do this for you. We're going to look at Tesla, TSLP for Kurv. We're going to go right into it. The synthetic is at 355, which is the orange line. That is fairly simple for everybody to understand. The red line is the protective put at 255. You can see that that is out until August 15th. So far, so good. Most people can understand that one. Now, the 350 is for approximately half of their calls. They've only written that one 50% of the portfolio at 350. Good. Now we still have upside of 50% beyond that 350. But at the same time, bought the 375 and sold the 420. That is different than what they have been doing before. And by doing this, it allows them to see upside if Tesla goes on a large run. Because when they buy that 375, it will go up in price, and the 420 is where they will get capped. So you're looking for the 375 to go up, but the 420 will come down in price. This is where a professional fund manager, knowing what they're doing, can really help you out in actually protecting your actual NAV. You can see that you have upside potential because they only wrote on a percentage of the portfolio. They also did their 2 calls, one bought, one sold above their current position. So you have potential there for income. And you can see that they put a protective put all the way down at 250, just in case Tesla decides to take a big dump. Totally different. This would take a little bit of income for you to do it professionally. That is why hiring somebody like Kurv to do it greatly reduces some of the risk of doing this. Now, one thing it clearly says in the prospectus is they will pay out the potential income of the put, the calls, rolling the calls. So what you're seeing is they're giving you an average distribution for right now, but at the end of the year, if they have additional income, just like they did last year, they will pay it out at the end of the year. At least that is my interpretation of what I'm seeing with their calls. It's interesting. They're making you income, giving you exposure to Tesla in a more complicated, but at the same time, probably a better way than just writing 100% of the calls and getting capped every time Tesla decides to go on a run because somebody makes a Twitter or X comment and it causes the fund or it causes the stock to go up in price significantly quickly. Here you have an opportunity to capture some of that upside because it's and also collect the premiums that you're looking for. Hopefully this explains what's going on with Kurv. Ever since they changed that prospectus, I've kind of stopped covering their calls just because it gets extremely complicated for one thing, especially with the Tesla, but you're actually dealing with somebody that's actually being a professional and writing these for you in different mannerisms than other funds that may get capped because they write on 100% of the portfolio. So at the end of the day, that is where everything is at. And it looks like a nice green day for us. So until next time, God bless.